Hello, everyone. To begin, Kimball International is a commercial furniture designer and manufacturer. After introducing a new organizational structure in 2020, the firm primarily operates through 4 end markets through its family of brands: Workplace, which made up 60% of fiscal year 20 revenues, Hospitality, which made up 25%, and Health, 15%, along with a newly dedicated e-business unit. The Workplace segment, including its Kimball and national brands, serves the following verticals: commercial, financial, government, and educational spaces. Kimball Hospitality and its brand D-Style works with hotel properties in mixed-use commercial and residential developments. Finally, Kimball Health and its brand Interwoven provides furnishings for patient exam rooms and lounge areas. Its e-business unit will lead enhanced e-commerce strategies across all brands and verticals. The company was founded in 1950 and is headquartered in Jasper, Indiana. Kimball International is one of the leading omni-channel commercial furnishers. The commercial furniture market is expected to become a $95 billion market by 2024, a CAGR of 9.1%. According to FactSet estimates, Kimball captures approximately 10% of industry revenues. In contrast to its peers, Kimball benefits from a broader portfolio of end markets. This diversification mitigates risks of overexposure to a singular market. On to recent key metrics and performance. Revenues grew at a 4.8% CAGR fiscal year 16 through fiscal year 19. Within that same time period, net income grew at a 17% CAGR, demonstrating Kimball's operational efficiency. Kimball has been proactive in mitigating COVID-19 downturns by acquiring a tech-enabled furniture design firm, Poppin, introducing cost management strategies, and creating a new e-commerce unit focused on innovation and direct-to-consumer expansion. Kimball endured only a 5.2% decline in revenues in fiscal year 20, while its operating margin and net margin grew 110 basis points and 50 basis points respectively. Because of its exciting growth opportunities and demonstrated resilience through COVID-19, it is recommended that Kimball be added to the AIM Small Cap Fund with a price target of $16.64, representing an upside of 41.03%. Moving into the drivers of my recommendation. The first driver is a recent transaction in which Kimball finalized its acquisition of Poppin, Inc., a digitally native B2B and D2C furniture design firm, in December 2020. Poppin's success as a tech-enabled market leader with access to the D2C market caused revenues to grow at a 40% CAGR from fiscal year 14 through fiscal year 19. Currently, 75% of revenues are from B2B transactions, and D2C exposure represents 25% of total revenues, with 81% of total sales sourced digitally. On a pro forma basis, Poppin increases Kimball's top line by 10%. Recently introduced products like the Poppin Pod and Poppin Spaces, as seen in the pictures on the right, embrace trends of flexible and modular workplaces. The 2019 U.S. Workplace Survey reports that 71% of people with a choice in where to work report a great workplace experience, and 77% of workers are asking for an environment that falls between totally open and totally private. Poppin and its new product lines capitalize on this sentiment. Kimball also created the Poppin Pro dealer program, through which Poppin products are now directly marketed and distributed to Kimball's established dealer network. Because of Poppin's strong sales growth and innovative product designs, Kimball is positioned well for the shift to an increasingly nomadic and non-traditional corporate environment. After introducing a new Connect 2.0 strategy in August 2020, Kimball implemented Phase 2 of their transformation restructuring plan. This plan is dedicated to the consolidation of fragmented manufacturing and management costs, as well as the reallocation of underperforming resources. This restructuring and cost management strategy aims to capitalize on the firm's existing assets while exiting investments no longer profitable. For example, in the first quarter of 2020, Kimball ceased its lease of 4 showrooms, resulting in $10.5 million of pre-tax cost savings. In fiscal year 20, Kimball delivered $25 million in total pre-tax cost savings, with an additional $20 million expected in fiscal year 21. Similarly, as you can detect in the line graph on the left, Kimball's gross margins have expanded for the 8th consecutive quarter through COVID-19 at a CAGR of 33%. Operating margins also continue to expand despite increasing restructuring expenses. Phase 2 is expected to be completed by fiscal year 2023 with an annualized pre-tax charges of $16 million when fully implemented. Embracing their future with Poppin, Kimball has invested in key innovative strategies to capture more of the D2C market, build out its e-business unit, and create a new work-from-home brand called Etc. In August 2020, Kimball appointed Karush Shargi, its first Chief Innovation Officer, to head its newly formed e-business segment. As of 2018, 74% of all major furniture firms did not sell online. However, now e-commerce platforms are expected to make up 32% of all furniture sales by 2023. Similarly, Kimball launched its e-business innovation hub in Atlanta, Georgia, to develop its work-from-home brand, Etc. According to Business Wire, the global home office furniture market is expected to grow at a 7.5% CAGR through 2026. Kimball's established market presence, coupled with innovative product designs, positions the firm well to capture this e-commerce opportunity. To reach an intrinsic value for Kimball, a 5-year DCF model was created. Using a terminal growth rate of 1.5%, a WACC of 8.51%, and a calculated beta of 1.18, an intrinsic value of $17.29 was reached. Additionally, an EV to EBITDA multiple valuation was calculated using a weighted average peer multiple of 7.91, resulting in a relative value of $15.23. Finally, a dividend discount valuation was calculated using a dividend growth rate of 1.25%, resulting in an intrinsic value of $17.01. By weighing these models 60-30-10, a price target of $16.64 was reached, representing a 41.03% upside. Kimball pays a dividend currently yielding 3.05%. On to a quick overview of potential risks. Since the workplace end market makes up approximately 60% of total revenues, permanent shifts to remote office cultures and work-from-home environments could detract from Kimball's top-line growth. Second, while its restructuring efforts have proven profitable in the near term, long-term effects of exiting showroom locations, severance costs, asset impairments, and other fees that would adversely affect the firm profitability if resources are not allocated to higher growth markets. Finally, U.S. lumber prices and demand have surpassed all-time highs. Increasing and uncontrollable commodity prices would negatively impact Kimball's cost management strategies. Now moving on to management. Christine L. Juster has served as Kimball's CEO since 2018 after working as a global executive at Newell Brands. However, she has served on Kimball's board since 2016. T.J. Wolfe was appointed as Kimball's CFO in 2020. Mark Johnson was also appointed in 2020 as Kimball's Chief Legal Officer. Despite these recent additions of the 3 executives and the new CIO, the average tenure of executive leadership is still 16 years. Additionally, 25 to 30% of all named executive officers' total salaries are paid in performance-based equity rewards. Notably, 50% of executive leadership and 38% of board members are women. And finally, 2.5% of all shares outstanding are owned by executive leadership members and the board of directors. In conclusion, because of its strong fundamentals, stable shareholder returns, commitment to cost management, and growth opportunities via innovation, I recommend that the AIM Small Cap Fund purchase Kimball International with a price target of $16.64, representing a 41.03% upside. Thank you all for your time, and I look forward to answering your questions via the D2L discussion posts and during the Microsoft Teams Q&A session.